Hi, welcome to the Market Alert for Thursday, the 7th of November 2024. So, Trump quake sparks greatest post-election day stock market gain in history. The Dow up 1,500 points. Gold tumbled as the dollar soared to 20-month highs. No surprise there, is there really? It's all smoke and mirrors. Trump turbocharges markets, and US stock market yields and dollar surged on Trump's election. And stocks and dollar rally while bonds dump on victory. Well, it might have been the case in the US, but Europe wasn't buying it. But we'll look at that in just a moment. So the euphoria of new brush, etc. Well, it's not going to last. Nothing changes. The fundamentals don't change. And Trump isn't bigger than the central banks or any of the other deep state participants in all of this. So whatever agenda he's got, the markets have used this for their own advantage to take the euphoria out of the metals markets and keep the illusion and the overvalued stock markets moving to the upside. So no big deal there whatsoever. It'll soon come back into balance. Today on more prosaic news, Bank of England monetary policy report, and also looks like we're going to get a cut in interest rates in the UK today as well. That's at midday, so the markets are going to have to make their own direction and probably continue with the euphoria in the derivatives for the Dow. And Bank of England governor speaking at 12:30. Then we've got unemployment claims, Fed funds rate as well, actually delayed obviously because of the election yesterday. So we've got a cut in rates as well. So that's even more euphoric for the stock markets. And wow, should bring the dollar down though a bit, but it's going to be an interesting day. I didn't realise that. I'd watched a couple of videos at 4 o'clock this morning about talking about the Fed funds rate, and I thought, well, it's not this week, but it is. They've just delayed it by a day. It's normally Wednesday. That was the election. So these items are going to be released later today, so let's keep an eye on it. But certainly beneficial for the markets on the long side, that's for sure, as far as the US is concerned. So let's move along, have a look at the markets and kick off with the Dow. So the Dow speaks volumes, doesn't it? You can just see it, 1,500 plus points yesterday, new all-time high overnight as well, and the market's continuing to move higher. That cut in rates from the Fed tonight is just going to make things look even more vertical, probably do half as much as it did yesterday on the Trump win. 30-minute chart, well, it's hard to see because it was so compressed, 1,500 points. And you can see there the markets, even when they opened at 2:30, just continuing the buying spree. And of course, in the last few weeks, we've seen ramping the market up, and then in the pre-market, and then the sell-off to begin with. So obviously, a lot of people buying back in now to take advantage of the new Broom situation. Not that new though, of course. Just happens to get re-elected from his first stint in 2016 to 2020. I don't know what to think really at the moment. All I can say is that what he proposes to do, I think he's going to find very difficult to do, but we'll see, won't we? We'll see. And also don't forget that between now and January the 20th, when the handover officially takes place, a lot can happen. A lot can happen with banking crisis and everything else, so it's not a done deal at all. So this euphoria that we're seeing, for me, is just temporary. And temporary it was for Europe. This is the German DAX. The market did move higher, but then sold off. I'd expect this to move back today, though, to the upside, particularly with the US cutting rates and the UK. We're likely to see a bounce here for the German DAX, but it wasn't buying it yesterday. Europe despised, or the European leaders despised Trump, so that was made known yesterday, wasn't it? And again, you can see how they blew a bubble yesterday in the US because nobody else was buying it, and that's very, very unusual. There's a complete disconnect there. Yes, it may have, in the pre-market session it moved down as the results came in. It did have a bit of a rally, but look, it even took out the low from when it started the move. So certainly at the moment the European markets are not buying Trump at all. That's for sure, but expect this to make its way back during today if the US stays buoyant, but they made it their point yesterday, that's for sure. And in the S&P 500, new all-time high in this market as well. Let's just see what it is. We're at 59.41, 6,000's on the cards, isn't it, for this market? But that's your new all-time high overnight there. at the moment. Not a lot to say really, it's just the same as the Dow. A bit more of a pullback there during lunch, but then finding its direction and off it went. We're above yesterday's high already as well, making another new all-time high. Again, the FT, same as the Starmer hates Trump anyway, as does Lammy. Now they're having to go begging, of course. But you can see same thing as the German DAX there, and prices again selling off below where the market started off yesterday morning. So overnight moving nicely to the upside, and I would expect the high to be tickled today with the fact that the UK are going to cut rates as well. So back to the US. There's your you've got a rally in the dollar yesterday. It gaps up. The gaps always get filled. That's the thing to remember. So, and it's starting to make its way back. Like I say, just euphoria. Let's have a look at the smash and grab in the metals markets. Starting off with silver. If you go back to yesterday's market alert, I was talking about $30 for the target. That's still on my radar as far as I'm concerned. They've wanted to achieve this since they allowed it to move up. They do it every single time. And I'm going to skip here at the moment. I'm just going to jump to the gold-silver ratio. And you can see that moving up sharply yesterday and up again today. Watch the 90 level. It gets towards the 90 level, and I should be buying more physical metals as well. But to see if we can get above that. We did have a bit of resistance there, but it'll be interesting to see if they're going to continue to push this and try and drive the metals prices to the downside using the euphoria. I mean, it's utter nonsense because the fundamentals haven't changed. The debt continues to increase. Trump actually printed 8 trillion when he was in last time. The debts are already at 36 trillion. They need $1 trillion every 100 days to keep the government going, and they're paying $1 trillion on the interest. So the fact that he's had a landslide is irrelevant. The fundamentals haven't changed. Like I say, we're just seeing the opportunity by traders to crush the metals as the shorts have those massive positions in the market. This way it reduces their potential unrealized losses. You can see there the buying back in though at this level. The fundamentals haven't changed in the metals. The demand for solar etc. is still there, and also demand in the Asian markets as well, and also the fact that Putin is buying silver for the central banks. So it's not a nonsense. It's just a shakeout, as it were. And same with gold. I mean, they had to tame this one, didn't they? Central banks like to buy it cheaper, and that's exactly what they've done. Market's trying to find a bit of support there, which is better than silver, which is why the gold-silver ratio was moving back to the upside overnight. And the 30-minute chart there, you can see they tried to shake out once more overnight there, and the market's now back above yesterday's low. Doesn't mean to say that it won't, but the fact that we've got interest rates being cut should help. But a big slam there yesterday. It's no big deal in the longer term, and at the end of the day, any purchases in physical assets like gold and silver is a store of value against inflation, and it's always worked. So it doesn't really matter. It's a long-term perspective, not 24-hour election news. Great, an ideal situation to actually add. So thank you very much is how I see it. Right, let's move on and have a look at yesterday's trades. So yesterday it was very difficult to get any trades. The volatility was massive, as can be seen, and prices just moved up after they'd come back down to the previous day's high. News of Trump winning, and then of course the European market said, well, we don't think so. There was a trade there, just went up, stopped at the BRN, and then it said, let's no, not Trump again, and the market's down, as you can see there. And then coming back down to the high, and then breaking the high down through the DP. Europe is not happy about this election win, and neither the UK, for the reasons I mentioned earlier. Having a Labour Party in that where Starmer and Lamy were not that pleasant in Twitter comments many years ago, and now of course, like I said it before, it's just poetic in some sense. But in the afternoon the market tried to move higher, but then got slammed immediately. And unfortunately we didn't get a sell off that because the bar was too big, which is a shame. And then the markets proceeded to once again move lower. When the Dow moved higher, that disconnect is rare, very, very, very rare on the levels that we saw yesterday. So yeah, not a lot else to report. We had a bit of a move to the upside there, but let's have a look overnight, see what's going on. And the current situation with the German DAX is moving to the upside, and no surprise there. They made the point yesterday. Will it all converge again, or will it remain as a disconnect and divergence at the moment from the norm? But a long way back up to the high. 100, 200, 300, 400, 500 points back up to the high. Is that potentially possible today? Well, it could be with the Fed cutting rates tonight, but we'll just have to wait and see, won't we? But there we go. So the fact that the rates are going to be cut as well is going to impact on the dollar, so it should bring some stability to the metals, unless they seize the opportunity at lunchtime to once again slam the price down $1 or $2 on the silver, to as they normally do with the LBMA fix, just to buy more or get out of short positions. Right, that's it for this one. A bit longer, but let's see what happens during today. Lots coming out today, lots to continue from yesterday. So have a great day, and as ever, thanks for watching. See you in the next one.